will be in production by 2025 for what will be one of the largest nickel sulfide mines in the world globally. We know because we've done the drilling and it's already that large, and we know we've only drilled off 20% of it, 250 million tons, about 15% higher grade than the average. All of that incremental grade is incremental free cash flow, which at the end of the day, that's what investors are investing in you for.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up at the end and do leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we're doing, and of course, what you think of the company. And you can also catch this as a podcast or read about it as a transcript or article on cruxinvestor.com. And of course, for our Crux Club members, you get early access. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Mark Selby. He's the CEO of Canada Nickel. Relatively new nickel story. They listed a few months ago. Share price has taken off. I think the market has reacted well to the story. They have the Crawford Nickel-Sulphide project in Timmins. We talked to Mark today about this story, how it came about, why he thinks the macro story for nickel is just hitting the cycle right, and what they're going to do to try and get this thing into production by 2025. So take a look in the description below at some of the topics we discuss. Anything interests you in particular, click on the number beside the topic. That's called a timestamp, and that'll jump you to that part of the video. Otherwise, enjoy what Mark has to say. Hey Mark, how you doing?
Good. Good to see you again, Matthew.
People know we caught up earlier this week and we're sort of going through some of the macro components to do with the nickel cycles and super cycles and so forth. And we picked up a trick or two. But today we're going to talk about your new project, which is Canada Nickel.
Sure. This is a brand new company centered around a brand new nickel sulfide discovery, which in just 6 months of drilling, we've already made it the 11th largest nickel sulfide resource globally on less than 20% of the structure. The key thing, why I have most of my money in this company is, one, you need to have the right project that is the right scale that's going to attract a major. Two, it needs to be in a location where you can develop it, build it and develop it in a rapid time frame. And three, you need to get the timing right. A great project will allow an investor to get an excellent return in a relatively short period of time. When you have a great project, which we think we have with Crawford, and you're able to sort of hit the commodity cycle, the key part of a commodity cycle, and again, we think we're hitting another nickel super cycle, by about the middle part of this decade. So, we think with the right project in the right place, with the right timing, it creates one of those, once every decade kind of investor opportunities. And again, that's why I've got most of my non-real estate capital in the company.
Right. So Mark, those are 3 key points, okay? And I want to talk about those. But first, I want to talk about your track record. You've been in the nickel game for some time now, so it might be worth kind of having a romp through that. So sure. I'm interested in what you learned during that time.
Okay, yeah. So I was outside mining for 10 years with private equity management consulting, joined mining in 2001. I joined Inco as head of commodity research in 2001. So I've been following nickel now as a commodity for almost 20 years. I joined after Inco got taken out by Vale. I was head of strategy. We tried to merge Inco and Falconbridge together. It unfortunately didn't work, but I left and I joined RNC Minerals in 2010, and we took Dumont from an early stage resource to a fully permitted construction ready project. And this is a large, low grade sulfide project. And our Crawford project is literally, it's in a different province in Canada, but just 200 kilometers away. And because there's so many characteristics that are similar between the two projects, all of the time and investment that we made in Dumont, we can leverage that to be able to advance Crawford in a much more cost-effective, much more timely manner. Again, which just means better shareholder returns on the capital that we need to advance the project.
Okay, and we're going to hit those points. We are going to hit those points, but I'm interested in the macro here. For people who are thinking about nickel, they've been looking at the market and going, "Hey, this battery revolution, this EV revolution, it's probably taken a bit of a whack here because of COVID." Yeah. Is now the right time to be investing in battery metals?
Yeah, no, I think it's the key is to get the right battery metal. And the one thing about nickel, it's not just a battery metal. The thing that has created these super cycles in the past, late 60s, late 80s, mid 2000s, and why we think we're going to see it again in the mid 2020s, is nickel's primarily used in stainless steel, which has been a very high growth, 5 or 6% a year material for many, many decades. And so that's not going away anytime soon. Stainless steel is still just 3% of the carbon steel market. So that underlying demand force is going to continue going forward. On top of it, you now have this new use of nickel in electric vehicles. And I think, the key thing for looking at commodity is, it's not just about demand. You have to also look at the structure of supply. So, the reality in the lithium space is there are, vast dried up oceans of salts in various, through the Andes and other places, that can provide a significant amount of lithium to the market. Same thing with cobalt. There's a significant amount of lithium cobalt in places like Congo, that can come to market at the right price and right time. So, nickel, we have a big source of supply in Indonesia, but the reality is when you step back and look at how much nickel do we need to meet continued growth for stainless steel, and then you layer in forecasts in terms of how much nickel you need to make, electric vehicle batteries. There's nowhere near enough projects in the pipeline, including, sort of developing everything you could possibly develop in Indonesia. And so the other key thing with again, in terms of your battery metals, I mean, lithium's always going to be on one side of the battery, but in terms of the mix and the cathode, nickel is the element that gives the car the range, and it's cheaper than cobalt. So, the industry has very rapidly shifted towards 80 to 90% nickel batteries from say 1/3 nickel batteries. That shift has happened much more quickly because of the spike in cobalt prices. So, again, as an investor, you want to go to where the metal demand is going, not where it has been. And so, in terms of battery chemistries, demand is shifting to nickel, and it's going to continue to shift to nickel going forward.
So you think future demand will come entirely from the automotive industry? I know it's used in steel, but what's the kind of ratio there in terms of what the future demand looks like?
Oh yeah, no. If you go out to 2025, we're going to need about 500,000 tons more nickel, and there's about 2.5 million tons of nickel produced today, so about 20% more than today. But when you get out to 2030, you're looking at 1.2, 1.3 million tons from the auto for EVs, and then you're going to need another 1.2, 1.3 million tons just to meet trend demand growth for all the other uses that nickel is used for. So that's double by 2030 what we're actually produced today.
Okay, and if you look at the use of nickel in batteries, obviously we're reading about Tesla trying to remove the need for nickel. And I understand that different batteries have different functions, but you still think there will be a big need for nickel going forward?
Oh yeah, definitely. I mean, there's a whole flurry of news around Tesla using lithium iron phosphate for one battery. I think I've said in some talking head things at one point or another over the last 8 months is the battery and battery system is the primary differentiator for an electric vehicle, just like the engine in a car. So, in the globe, there isn't one single engine that's used in every automobile. So, in the EV sector, you're going to see basically a low-end, short-range battery that's just as cheap as possible. And so that lithium iron phosphate is perfect for that. And Tesla in China wanted to hit a specific price point, and range is not a big issue, in that market. You're going to have your mid-range battery, which will be more commonly used by 60% of cars. And then there's going to be this is the absolute longest range, the absolute highest discharge that'll allow you to go from 0 to 60 in 1.5 second battery, and you'll have different technologies there. Nickel will play a big role in both of those sort of the midstream and then sort of the upscale battery chemistries going forward.
Okay, so people are still excited about nickel. It has a part to play with battery metals. You think the demand's there, is what you're saying. Okay, so that's one thing. Timing, cycles.
Yes.
Okay, so you've talked to me in the past about these super cycles and being able to hit it right. I mean, if I'm quite candid, you started Dumont a long time ago. It's still not in production, right?
Yeah.
So.
Yeah.
And I get that you've learned some lessons about the geology and technically and so forth, but why is your project not going to take as long to develop?
Suffer the same fate? Yeah, no, fundamentally for two reasons. One is, Dumont was somewhat an evolution of a mining model, and so we needed to prove that that evolution was robust economically, and could be constructed and built and done, in a very straightforward manner. So we had to spend, a bunch of time on engineering and a bunch of time educating investors and so forth, and we did that quite successfully, but that did take a bunch of time and cash to be able to do that. The second part is we were doing it during a time period, and we knew when I joined in 2010, I knew that nickel pig iron was going to be sort of 5 or 6 years of significant growth. And I can show you in a presentation I made in 2008, just saying how big nickel pig iron was going to be and what it was going to cost eventually when someone built a plant in Indonesia, which is what did happen. And so, again, there was just, we were advancing a project in a metal that people really didn't care about at that time. Today, the tables have flipped, 180 degrees. You've got BHP Billiton, who spent that entire time we were advancing Dumont, they were busy trying to sell their nickel business, and didn't have any takers, and in the last 24 months, not only has BHP said, we're committed to battery metals, we're actually building downstream processing plant in Australia. Their CEO was quoted as saying, we need more nickel, we need more future-facing metals, we need more nickel, more copper. And then, 3 months later, they put their money where their mouth is, and they acquired another large-scale, low-grade nickel project in Australia called Honeymoon Well from Norilsk. So, they've done a complete 180-degree. You have the world's leading mining company, committing capital, making acquisitions, in this space. And once one mining company goes, the herd usually follows. So we saw Oz Minerals do a transaction to acquire the 30% of a project called Nebo Babel. They acquired a company called Cassini Resources, which put a $250 million value on that. We already have a multiple of contained nickel in resource bigger than that project, and we have a huge amount of exploration potential to go. So I was very excited to see that transaction. I knew they were coming. I didn't think they would come this quickly. So, as of right now, the three good large-scale lower-grade nickel deposits in Australia are all gone. Yakabindi, BHP is now advancing that to fill in further as their Mount Keith mine winds down. Honeymoon Well's been acquired and Nebo Babel's been acquired. And so, literally, in terms of large-scale low-grade nickel projects in Australia, that's it, of any scale. So I think it speaks, speaks in terms of what's to come for other large-scale low-grade deposits like what we have at Crawford.
Okay, so sounds like an exciting time for nickel if you're in a position to be, rolled up or absorbed into someone else's business.
Yep.
And the demand's there. So we're sort of establishing. I just want to establish the ground rules for investing in this space, okay? And then we've got to talk about location, okay? So tell us where you are, why that's so good, and why that's working for you.
Yeah, there's basically 3 components to location that matters. One is, do you have all the infrastructure in place to be able to build the mine, or do you need to spend $1 billion to get water, rail, power, electricity, to your project before you can start building your project? So we're literally just outside the town of Timmins, which is a 100-year-old mining camp, and all that infrastructure is already in place. Number 2 is, the community and the First Nations in your area, supportive of resource development in the broader area. Again, in terms of getting your project permitted, and being able to operate in the way you want to. If community and First Nations are supportive, then you're able to do that in a much more faster, much more efficient method. And again, this Timmins is an area where there's been a number of projects permitted, over the past decade. And then third, you don't want the government, after you've done all your work, to confiscate either directly or effectively financially through changes in taxes, royalties, ownership regimes, what you've spent a bunch of your shareholders' money, taking to the goal line. So in Ontario and Canada, again, it's about as good a jurisdiction as you can get.
So it's good, but permitting, there's something we keep coming across in Canada, the time it takes to get things permitted. So what do you know?
Yeah, so the key there, again, every country is different, for sure. Every province within a country is different, and even within a province, it can be very, very different. I think what's great about the Timmins and sort of the broader Abitibi area that spans both Ontario and Quebec, you've had a bunch of the largest mining operations in Canada permitted during the last 15 years in a timely fashion. So you had, within a 150, 200 kilometer radius of Crawford, you've had a Cisco's Malartic project permitted. You've had Detour Gold's mine permitted. You've had Dumont permitted in the Quebec side, and then recently, IM Gold had their Côté Gold project, which is just to the southwest of us, also get permitted. So, again, the local community, the provinces, both Ontario and Quebec, have very well-defined permitting processes. And when those things come together, you can get through. I mean, you have to spend time getting through it, but you can get through it in a very well-defined basis. There are other parts of the province where, the ownership and relationship with First Nations has not been well established, and so as a consequence, companies get tied up in those kinds of issues. You have again other places where they're pretty remote, and so you need to build a lot of infrastructure that crosses through a lot of communities and a lot of First Nations groups that you need to get all them coordinated to be able to build that infrastructure before you can build your project. So the fact that we've got we'll have it'll be large but a very compact in a single location is very, very advantageous.
Okay, so that's great, but the question I was asking was timing. How quick is it? Are you waiting 10 years? And we've talked to companies where they're sitting around 9-10 years later, still not permitted.
No, this is not. No. In Ontario, each of those projects got permitted within a 3-year window. Part of the reason, that we're going to have a scoping study done, literally just a year after we've started drilling last fall, is because we want to have that information to be able to start that permitting process as quickly as possible. So we can be in a position as early as possible to begin construction. To be able to hit what we think is going to be a good nickel cycle.
Okay, well, let's come back to the
Sure.
first point you made, which is around scale.
Yeah.
Okay, you said that's really, really important. So what do you know about what you've got today? Because you're relatively new. You can't have that much information. So how do you know you've got scale?
Well, the benefit of doing it for a similar deposit like Dumont, and then the type of deposit itself being sort of a large disseminated ore body, has allowed us, again, we started drilling last September, and by the end of February, we had the 11th largest resource, 2/3 of which was in a measured and indicated category. And so, we know because we've done the drilling and it's already that large, and we know we've only drilled off 20% of it. And again, because the geophysics has been, very helpful in terms of showing where the resource is, we're confident that we can make it considerably larger and the potential to be higher grade as well, as we continue drilling here.
So given you've got this huge scale resource, why bother with picking up these additional options?
Yeah, so about a few weeks ago, we closed a transaction that we announced earlier, where we picked up 5 other options on 5 other land packages that have, we think similar ultramafic, and again, potential for more large-scale nickel deposits. Again, I'm not here to drill my brains out and build a large resource, but it's really about, okay, is there a potential for multiple deposits in a large district? And we wanted to make sure that we locked up what we thought were the best targets. The good thing for us is that the geophysics really does, in the area we're in now, has been instrumental in really zeroing in on the highest grade part. So again, what I want to get from those other option properties is not necessarily just a bunch of 0.25% nickel tons. It's really, can we find more places to get more of this 0.35, 0.4% material that, again, is all about front loading the mine plan and the PEA with as much high grade and as much cash flow as possible.
Okay, and so you've done some drilling, and so what do you know about the grade at the moment then? Because I know we talked about a month or more ago, we were talking about some sort of byproduct upside for you here as well. So can you just talk about what you've learned through the drill bit?
Sure. There's sort of 3 things. So, what intrigued me about the project from the first 4 discovery holes that were made was there was this potential for a higher grade core, and so that's came through very nicely in the initial resource. So we had 250 million tons out of the 900, which was a 0.31, about 15% higher grade than the average, and about 15% a higher grade than Dumont. And then within that, we had higher grade shells 96 million tons at 0.34, and within that, 28 million tons at 0.38% that came right up to surface. So that would allow us to start mining. It is so critical in a mine development that, particularly for larger scale deposits, if you can spend, take 3 years, 5 years, 7 years of feed, at grades that are 30% or 50% higher grade than your average, all of that incremental grade is free cash flow, right? It's incremental free cash flow, which at the end of the day, that's what makes, that's what investors are investing in you for. So, the more free cash flow you can generate earlier in the mine life, it just helps the project economics immensely. So, the things that have come out, which have been nice added bonuses, were one, we found this sort of separate PGM zone that runs parallel to the nickel deposit. It's literally, if you think of a curtain or wall of PGMs, that's 400 meters high. Again, that's bigger than most office towers in any major city. And so, we've defined it across several kilometers already. And it's basically, 3 to 5 meters wide. And it's it's just outside the nickel mineralizations. So we would be mining where it sits anyways to push the pit walls back. So, we'll be mining this material, which will be a nice byproduct credit. Again, it's you're mining it anyways. If you can generate a pile of cash out of it, it just helps the overall economics. And then the third piece has been, we have a substantial amount of magnetite, which is an iron ore product. And again, in the flow sheet that is sort of the standard for these type of deposits, you end up pulling out this material. So we'll have that as part of our base case, which will be a separate revenue stream, again, which will create more free cash flow for the overall project. So that's why I'm very excited to get to a scoping study to be able to really demonstrate to the market, just how robust, we think this project is going to be.
When's the next set of drilling happening?
Yeah, no, that's a great thing. Again, in terms of, I wouldn't wait too long, because we've got a whole series of these infill drill results coming out over the next 2 or 3 months. We've got a whole series of metallurgy results that'll be coming out over the next few months as we all feed all that into the scoping study. And again, those will be some of the to some serious investors as they start to see that kind of information. That's the kind of stuff that'll help de-risk it for them and start to want to get into the story at this stage.
So talk to me about this, because I normally start conversations trying to understand the mindset of the management team, the business model, how they intend to play this out. We've kind of gone through a process there from macro down to the project and the geology, and which I think has helped me be very clear about what you're trying to build. What I need you to be clearer about now is, what's your approach to market? Because we've talked in the past about accelerated timeframes, hitting the cycle right. So how are you going to do that?
Yeah, it comes through two sort of key pieces. One is just in terms of approach, and the other piece is around having the right people with the right experience, get involved in the project at the right point. So, in terms of approach, I could sit here and drill this thing off all day long, and could probably end up with, the largest nickel sulfide resource. And again, a lot of juniors, that's what they do. It's all about, we just develop resource, and we just keep drilling and drilling and drilling. Again, we already have the 11th largest resource. We have, enough resource there year for a multi-decade. So, for me, it's okay. We have enough, and on that front, we're going to make it way better, and it will get bigger as we continue to drill. But it's okay. Now let's take what we have and advance it as quickly as possible. So, scoping study at the end of this year, feasibility study at the end of 2021. We'll get permits done as quickly as possible, which means, likely by 2023 we can start construction, and we'll be in production by 2025, 6 years after we start drilling, right? That's it, for what will be one of the, one of the largest nickel sulfide mines in the world globally. So, and again, where the location is allows us to be able to have, to be able to move that quickly. So that, it's great to put boxes on a timeline to say this is what you're going to do. Then you have to have the time, the people and the experience to be able to do it. So, at Dumont, we did 2 pre-feasibility studies, and then we did 2 feasibility studies. And again, we had to really, establish how to get this type of deposit in place. And so again, all of that time and all of that money that we invested in that, we can leverage that experience, to this project. So I've got several key people who are involved in the key parts of Dumont. involved at Crawford, Senko, who I think is one of the world's leading engineering firms in terms of developing real projects. They not only just do studies, they actually build them. So they come up with robust capital cost numbers and robust operating numbers that, they, end up getting hit. And so, we have them involved in the scoping study, and what we've laid out with them is they'll be involved right through the feasibility study, to deliver that by, the end of 2021. That's our goal, as we move forward here.
Okay, so that's quite an aggressive timeline, but like you say, it's easy to say, harder to do. And I get that. Okay, fees, in production by 2025, fantastic. But you're going to need to raise capital along that path. I get that you're saying to me, we've taken what we've learned at Dumont, and we're going to avoid those mistakes, save that time, and save that cost on what we've got in front of us. You're laying out a pathway which, for your current shareholders and potential shareholders, here are the things I'm going to hit. And if I don't hit them, you can judge me on that. But the other thing, unfortunately, you do have to bring this money into. So how much money have you got today, and where's it going to get you through to? And then presumably you're going to need to raise the next chunk of change at some point.
Oh yeah, no, we raised money back in April in the midst of COVID. That'll take us through to deliver the scoping study by year end. We'll need to raise between $10 and $20 million to do the feasibility study. We'll raise that sometime between now and year end. And again, the key thing there is to get, either some sort of strategic in there or some larger mining funds. Because again, right now our shareholder base is primarily, it was the first round of financing was friends and family. The next round was friends and family and some bigger brokers, some of their clients. And so, there's still a huge amount of upside because none of the major mining funds, are in our story right now. So, in terms of taking the share price up to the next level, there's a huge amount of room, to be able to bring these guys into the story to raise the money we need for the feasibility study, and in terms of valuation from where we are now to, where I think, ultimately the project value will, surface in the market.
What did you learn at RNC about talking to the market? Because, the share price at RNC stagnated for a long time for lots of different reasons. But what learnings are you taking from that to apply to what you're doing today with Canada Nickel?
Yeah. Oh no. I mean, to be honest, we went public at the end of 2010. We hit a window. We raised $50 million. But at the end of 2010, it was development stories were still very everybody was investing them, and we went out at about a $2 a share price and $120 million valuation. I was on the board of a junior company at that time that also had $120 million valuation and had an early stage copper exploration project. Valuations were very, very high, and like the entire sector, we traded down from $2 all the way down to 15 or 20 cents in 2014 or 2015 as we advanced the project through the feasibility study. So lesson one is you have to be in a market that is going to be accepting of your project. So that I think we're in a window now that yes, nickel is in favor and people want to buy the project in the end. Number two, when I joined RNC in 2010, it had been a private company for 3 years, and they had done multiple rounds of financing. And to be honest, we inherited a relatively sloppy share structure and ownership structure. And again, that was a real overhang on the story when you don't have a tight group of shareholders who come in, who are there because they fundamentally believe that we have one of the great nickel projects, that we're going to see through either to construction or getting taken out. And so, that was a real overhang on the story for a number of years and was a deterrent for some of the new money coming in. So again, part of this was a brand new company, brand new set of shareholders, tightly controlled. And so again, as we go through these milestones, we'll be able to have that value realized for our shareholders as we move forward. And then the third piece is, what made Dumont challenging is that, it was a large project. We had to do a bunch of sort of new work that we had to finance. And again, this project specifically, we don't have to do that sort of novel development work that Dumont didn't have to do. So I don't have to, we've already, we've raised the money we need to take it through to a scoping study, and it's a fraction of what we needed to do at Dumont. What we'll need to do for the feasibility study is also a fraction of what we raised at Dumont. And so, again, that's why this is, I believe, such a good story.
Okay, because I think that's going to be a big part of this is getting assurances. Well, not assurance, it's hard to give assurances, but you know what I mean. Get a sense of the fact that the market is building for nickel. I think we can safely tick that box. And more importantly, that your model, the way that you're going back to deliver this, is not heavily dilutive. Okay, you don't need to go and raise so much money that the share price just never gets a chance to get out of gear. And you think that this kind of, because I think the thing that you said there was kind of interesting to me is like, we know it's large. We don't need to keep drilling it because it's large enough. It's the 11th largest in the world. We can tick the large box off, and it's maybe 20% of the ore body. So we can come back to that, but it's large enough to get people interested. So on that basis, have you? I know you've been in the industry 20 years, but have you had conversations? How do you know that the big guys are sniffing around? You've talked about BHP and Oz Minerals there, but who else is sort of sniffing around these? Because not just yours, but there are other nickel projects. And why? What are?
Oh, yeah. Well, I know they're sniffing around because they've contacted us.
Right.
So even again, early stage, just with some of the drilling results and the fact that we could kind of point to what the size and scope of it was, even last winter. There's have been several mid tiers and several majors who've already sort of keeping an eye on things, and so typically where they like to get involved is around sort of scoping study through feasibility study. They want to see some sort of economics around the project, to make it an easier sell for them, within their organization, if they can point to a third party report that says, that says it's worth $1 billion or $2 billion or 500 million or whatever the number is going to be in the scoping study. But no, that level of interest, now that we've got our initial resource out, we'll have a new resource out by the end of July. That will, we'll see more and more interest as we get through to having that scoping study delivered by year end.
Okay. So that towards the end. So, and when's the moment you think people will take notice of you? Do they have to wait for the scoping study, or do you think that I know you've been telling the market the story, and there has been a interest because we've seen it. People are talking about you. They're talking to us about you. So, do you think now's the time? Are you going to say yes? I know, but do you think now's the time, or should they wait for the scoping study? I mean, you don't need to push it too hard before the scoping study comes out, do you?
No, I think it's much easier for investors and other companies to invest in something when there are 10 other things that look similar and they can kind of fit it in the box. Our challenge with Dumont was that there wasn't much else that looked like Dumont that was visible to the market. Mount Keith was a wildly successful mine for BHP Billiton for a long time, but it was buried 2 levels down and didn't really get to sort of, didn't see much detail on it, for most of its life. Now that there's all the data points around Dumont, there is BHP making these acquisitions, and some other projects, have advanced. The scoping, because people can't look at 10 other projects and say, it's just like this one, it will be, I think, very helpful for people to see that scoping study and say, okay, I had no idea that this kind of a nickel intersection could translate into, this much, total NPV, right? And that's really, what we're going for. Now, in the meantime, I'm going to be pointing that out to people and pointing to that as much as possible. So again, I think, we should, and again, the mining funds get that, and they'll hopefully be coming in between now and year end, and then we'll get that strategic, investor, really picking up as the scoping study comes in, and then as we move into the feasibility study process.
Okay, Mike, I get it. I mean, it's exciting times for you guys. You've got to deliver the scoping study at the end of the year. We'll stay in touch. We think there's one of the better nickel stories out there. I think nickel's definitely on the up again. So, stay in touch and, keep us up to date with how things are progressing, please.
Sure. No, that'd be great.